Welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. We're going to kick off today with US dollar, Japanese yen. There's been some developments in the market and we've started to see the trade go our way. So I've been short dollar yen for a little while now, and what we looked at initially was this move here. So we were looking for, if my tool will work for some reason, it is not working. Right, let's get rid of that pen tool. Reload it up, see if it works. No, not working. Right, okay. So we're going to have to agree without the pen tool today. So you're just going to have to deal with the cursor, unfortunately. However, look what's going on with US dollar, Japanese yen right now. We've seen the market drop significantly again overnight. Why have we seen that? Well, there's been some reports that there's been some commentary from the Japanese finance minister Katayama, who said that pension funds should be encouraged to invest more in the domestic market. And that actually saw the 10-year yield drop by about 16 basis points. So more commentary from the finance minister has driven yen strength in the market. And we've seen the price move from these kind of 162 handles again down towards the 161.90s. So I'm still short. I've been short from sort of 162.25 and 162 sort of 40s. The reason why I've been short is because the market is at this kind of really strong weekly level of resistance where we previously saw intervention from the Bank of Japan and the market fell significantly. So I'm trying to catch that potential intervention move. Stop losses are way above 163.40 at the moment, simply because I want to just protect that move. So the initial move that we had, which went in our favor by like 160 odd pips, well, it was nearly 200 pips, was when we had the South Korean stock market drop due to that kind of AI worry, and the market dropped. We then kind of recovered that after finding support at the 160.60 handle, and now we've found resistance up at this level here. Now, if you're unfamiliar with using things like market profile, it's very similar to volume profile, but basically how it forms is by the amount of time spent at a particular level. And again, it kind of similar to volume profile. If time has been spent within a particular zone, it means that there is volume, there is value being built at those levels. So what I did was I used my adjustable market profile tool here and highlighted this level, right? So I was looking at this 160.70 handle, and the market came right into this level, and you can see it wicked just straight off of it, off that 160.70, dropped about 20 pips, and then followed through with a 140 pip drop. So I could have added another short position here, another sell limit on perhaps at this point, looking for price to kind of punch back down as well. But I already had the two orders in place. I am still short right now, around about $100 up at the minute, which is not much. Looking to see if I can get at least $500 out of this move. Looking for quite a decent move to the downside, to be honest. I'm hoping that we get kind of like decent intervention. So $400 on the one, $980 on the other is what I'm looking for this overall move. Now, the only downside to holding this position at the moment is the fact that it's negative swap charges, because Japanese yen or the Japan in general has a lower interest rate than the US. So that's why we see those negative swap charges. If I was buying dollar yen, which is what a lot of funds and hedge funds do and things like that, because you get what's known as positive swap, because you are buying the country currency which has a higher interest rate than one that doesn't. So, that's how hedge funds trade, really. They look for those sort of differences in interest rate differentials, and then that's how they take advantage of the market. So I like the idea of being short dollar yen still. We may not break this 160.60 handle. I may try and take profits a little bit early on this one because of those swap charges, and maybe add in to a potential move. But let's say I moved the 0.25 sell up to here. That's still $250, and that is around about 1% of my account with value. So I'll see what price does around that level. At the moment, I still want to try and target down towards these swing lows on dollar yen. So I will just keep my eye on this particular move in here. So dollar yen, yeah, let's keep our eye on it. I think there is a possibility that we could see that continuation. Dollar at the moment today, if I just go and grab the US dollar index, starting to be a little bit more bullish again. It had started to fall once more. We started to see some daily bearishness coming in here, and we are trading back at this kind of key support level now on the dollar index. So we could see a little bit of a bounce. If we do, market could try and push higher. If we take a look at euro dollar, for instance, market is starting, it's just the inverse of of dollar index, and we can see the market is finding resistance in here. Now, if I just grab again my adjustable market profile tool, let me just see, get rid of the old one there. Just drag this on the chart and look at this move in here. Again, look at this. Market fell from the 1.6s all the way down into the 113.29. Adjustable market profile comes on the screen. Where does it show most trading action? Around about 114.60. And look at how the market reacts to that point. Okay. This is just a very advanced version of support and resistance. Support and resistance, you're looking at it and you think, well, I'll be looking at this area here, for instance, right? Because you can see price bounces off, breaks through, acts as resistance. That's fine. But sometimes there are hidden levels within these consolidations. And you can see if you were waiting, if you put an alert up here at 114.79, waiting for price to come to it to try and trade it, then you still be waiting. Whereas if you looked at an adjustable market profile tool like this one here, you can see that the most traded area, or the point of control, is 114.63. You could look for price to come into that, look for rejections away from that. And at the moment, we have had 3 key rejections from that zone. So as long as price stays below this point of control right now of this area, you could potentially continue to look for that short. Now, obviously, if I drag the market profile over the whole thing, it's going to change. That point of control position is going to change lower because we've added more information. And you can see price has been consolidating between that sort of 113.30 up towards that 114.75. What's interesting, though, is you can see actually, even though I've dragged that information over, it is value area high. So at the moment, price is trading within value. So that means buyers and sellers are happy between these prices. So, and what can happen in this type of situation is the market can trade from one side of value to the other side of value and keep sort of doing it. So it's almost like a range being developed where you see this kind of value. So if price breaks out higher, then, where is that next source of value? Well, the next source of value is all up here, right? So it tells us that if we break out, we can look to try and target up at the 115.40s, potentially up into the 116.10s. But for now, if we're going to stay within this range, where could we target? The low, value area low, 113.70. Okay, so that's what I'm looking for here on euro as well. Now, the big story of the day, there's not really much going on in markets right now. They're waiting for a bit of a catalyst. But the big story of the day right now is CAD employment, right? So today at 1:30 p.m., we've got the employment change for Canada. Canada has obviously had some really weak data over the past few months. So there is a potential here that if we do see an increase in the unemployment rate, decrease in employment change, that the Bank of Canada still has to act, still has to bring rates lower. And they are one of the only central banks that have been cutting interest rates, because no country really wants to see their unemployment rate drive higher, right? Especially look back in 2025, look at that increase in the unemployment rate. And what they were doing around this time, if I just go to trades and economics, let's go to indicators, unemployment rate, and we'll find, let me just, I don't know whether I could sort it by Canada. Should be around here somewhere. If not, let's just go back to the main screen. Let's just go Canada here, unemployment rate. And we can compare the Canada interest rate on the chart, right? Let's just go out to a 5-year view. So what we've got on the chart here is Canada's interest rate, right, and Canada's unemployment rate, right? And as unemployment has started to really rise, getting to the 6.6s, even 6.7s back in May, highest point August 2025, 7.1%, Canada have been cutting interest rates to try and help their economy get stronger, right? So really, since we were passing that 6.4, 6.6% is where we really started to see Canada start cutting interest rates. We can also obviously add in some other data in here as well, which is Canada's inflation rate, right? And currently, Canada's inflation rate is rising up to 3.2%. So we've seen a move coming in from that kind of 1.6s all the way up into 3.2. So they're going to have to, well, essentially there's a problem where we could see stagflation form in Canada, right? Where we have an unemployment problem, but inflation rising. And they need to try and stimulate the economy to do that. So stagflation is bad, which is essentially bad for the currency, right? So if we take a look at what's been happening, especially on dollar CAD prices, dollar CAD prices especially, have been rallying significantly from the low on the 1st of May 2026. Price has moved over 690 pips to the upside on dollar CAD. So we've seen a huge rise in price here. Now, I still like the idea of selling CAD. I think selling CAD is a great opportunity for traders at the moment. And if we take a look at the current price action here on the daily chart, we've pretty much gone sideways since the 22nd of June, right? So the past sort of 15 trading days, we've gone sideways. And that's a lot to do with, obviously, there's a bit of dollar weakness in the market as well. And combined with CAD weakness, when you've got two weak currencies going against each other, the market will range. However, what we could potentially look for is a bit of a breakout here, a little bit of a breakout situation. If I go to the 4-hour chart here, we can see we're starting to find support at this kind of 114.50 handle. If we do find a little bit of a breakout situation forming, then price could come up into the 114.38, right? Again, let me just put the adjustable market profile on the chart. Hit that on the keyboard and bring this up, and it'll just show us that the market is trading in a trading range, right? So essentially, we've got the value area low at 141.60, right? That 141.50, 141.60 range. We've got the value area high, point of control, very close to each other around 142.16. So I want to see potentially a move up towards these types of levels, seeing the market stay within this trading range. Look at all these wicks to the downside as well, just keep failing to kind of break lower there. So I like the idea of being a buyer of dollar CAD. There's actually a nice sort of, let's have a little look at the hourly chart. Hourly chart, we've got the 50 and the 200 moving average crossed over, but that's okay because this is a range. We're not expecting a trend in this market. So, you know, looking at this kind of current price action, I'd like to see another move back down to the value 41.60. And if we reject that, then I'm going to be looking potentially for a little bit of a move here. Just going to check the 30-minute chart and just pop a market profile on that just to see where price is. Yeah, we've got like a high volume node sort of around 140, 160, previous highs on the hourly as well. So I'm going to set a little alert here. If price can come back into this area, reject it, I do like the idea of being bullish. If I take a look at the currency strength meter as well, I can see that, you know, CAD is currently the fourth weakest currency, and the dollar is the second strongest. So dollar CAD longs still makes sense for me in that environment. So going to keep a lookout for that one. Let's move on then. So I want to just go back and have a quick look at gold before we move on. I like the idea of potentially looking for a bit more downside on gold. Okay, so this is a 15-minute chart of gold, right? And what you can see on your screen are some profiles. So we looked at this yesterday, and I said I like the idea of being long around about this 4,094 area back up into the previous day's value area high. So if you did look at that trade in there, you can see we actually rejected from that low volume area, or that low node on the market profile, and the market rallied up into the value area high of yesterday, which is around about that $4,133 area. So the market came into that, rejected it, and then we closed inside the previous day's value. Today we opened up obviously in yesterday's value, so that's the 9th of July, and the market has been kind of just consolidating, and then it broke lower earlier in the London session. So now we've seen that kind of breakout. We've come back into that low node area around about that $4,095 handle, and we are pulling back. Now, looking at today's current profile, right? So what we've been building over today, we can see that the value area low is $4,111. It has the 50 moving average just sitting above it as well. And we've got previous resistance lows there. So that could be a very strong area of resistance for gold prices. Now, the reason why I'm interested in potentially seeing gold just come a little bit lower as well is because, you know, I was checking out the real rates chart. So if you want to look at how gold performs, then you can really look at real rates. And sometimes there is a real strong correlation. The correlation can be off a few times as well. But usually when we start to see real rates jump lower, that is pretty bullish for gold. When we start to see real rates trade higher, that can be bearish for gold, and so on and so forth. Now, if I look at the correlation between the two, so if you want to check out your chart on TradingView, you need to type in US 10-year minus the Fred hyphen T10YIE. Okay, so that's basically our US 10-year yields minus the break-even inflation rate. Okay, so just for your reference, if you want to see this chart, you then need to compare it to the chart of gold, which I've got on here. So the blue line is gold. Yellow line is the US 10-year minus the break-even inflation rate. And I've got the 50 moving average on the chart as well, which is that grey line. Now, you can see since the Thursday, the 26th of February, where we started to see real rates drive higher, you saw gold prices fall. Okay, so this is why I'm interested, because currently we've got real rates around about 2.3%. Okay, and as that continues to climb, we're going to see investors move away from the likes of gold and invest more cash into US debt, right? If you look at just normal yields, so take a look at the 2-year yields right now, trading up at around about 4.2%, as well as the 10-year, which is trading up around about 4.5%. So we've still got US yields kind of climbing, as you know, we've got inflation reports coming up next week. But if we do see these continue to go, then there is a good possibility that gold prices could continue to the downside. And that is the trend, right? The trend of these of the yields is up, gold is down. So that's why I'm looking for a little bit more of a continuation of the short here. Also, to kind of top that off as well, when I was looking at retail sentiment, so if I actually just let's bring in some retail sentiment. And take a look at gold. Where is gold? Here we go. It's changed a little bit, but it was 80% gold short. It's a little bit different now. But if I look at the positions here, I can see that they are reducing their short. Retail are reducing their short, reducing their long position, sorry. And they are increasing those short positions. Okay, so we are starting to see a potential where gold prices could start to reverse a little bit, because you kind of want to do the opposite of what retail are doing. But they're not getting long, right? That doesn't necessarily mean they are getting long right now. They are basically reducing those long positions and increasing ever so slightly those short positions, right? So they are starting to think about maybe, you know, what is the trend here? Should I start shorting gold? And when they start asking that question, you know, there could be a little bit of an end. So I like the idea of, you know, seeing a little bit more downside on gold as long as those inflation, those US 10-year yields continue to rise. And I like the idea of just short term coming down into those key areas of support. So what I'm looking for today, when I look at that 15-minute chart, is a push up into this 411 area and a rejection from that. I'm checking out the 1-minute chart at the moment. I can see that obviously we're breaking above trend here at the minute. So I need to see price kind of come up into that area. If we see a break in the trend on the 1-minute chart or even the 5-minute chart around this area, that 411 area, I'm going to look to short gold on the day. Hopefully see a little bit of movement to the downside. And if we do, happy days. I'll look to take some profits around about the 4,095 area. And then if it breaks through that, maybe there's an opportunity to see it come down to previous day's value area low at $4,080. So keep that in mind for gold as well. So I just wanted to show you that before I move on to the skill of the day, which is how to trade the trend, right? Very, very, and it's the name of our stream today, the step-by-step guide to trading the trend in Forex. So what is trend, right? Let's just go grab let's see if I can bring up a whiteboard. Right, it's not going to let me do this straight away. Let me just... And what we're going to do is we're going to show you how you can trade the trend. Right now, really simple method that I like to use is what I call the WCS method, right? So I always like to think about why a market is doing a particular thing. Then I look at the conditions around that and then look for opportunities. So let's take an example here, right? Let's bring up, let's split this down. Split this down into 3 sections, okay? You got the Y. Okay, so why do currencies trend, right? There's a few simple things that we can look at. The first one is there is a strong currency, right? And this is the simplistic version of it versus a weak one. Really simple. When you have one currency that is strong, it outperforms the currency that is weak. Easy, right? How do we get to the bottom of that? Well, it comes down to a lot of macro elements, or there could be some geopolitical issues going on. It could be, I can't spell today. Geopolitical tension going on. There could be, let's just say interest rates. It could be seasonal, right? You're gonna have to ignore my writing here because I'm using the mouse. But essentially, you need to find the why. Let's say take a look at US dollar recently. Why do you want to be a buyer of the US dollar? Well, it's because we're seeing US yields drive higher, so there is a potential for the Federal Reserve to price out interest rate cuts, which is what they had priced in, and price in rate hikes. So the dollar has been strong. Take a look at CAD. We've seen unemployment rise. We've seen growth expectations from the central bank fall, and that has led to the Bank of Canada cutting interest rates. So you've got one currency or one central bank hiking, you've got one central bank cutting. That's your why. Summed up there. Then you need to look at the conditions. Okay. What conditions do you need to see in order for a trend to form? So let's use that example. Let's say the US dollar is strong equals strong and CAD equals weak. What you would want to see from that chart is US dollar CAD forming higher highs and higher lows, because that tells us that the US dollar is stronger than the Canadian dollar, right? Making these higher highs and higher lows. Now, let's say we're at an area of support, market was trading down to it, and then it broke trend. It started to make higher highs and higher lows. Perfect, because that means that what you expected from the Y is actually forming in the conditions, right? Now, what that allows us to do is move to the third step, which is trader strategy. Now, a simple trading trend-based strategy is by looking at moving averages. So let's say you have a 50 moving average on the chart, and then you have a 200 moving average on the chart. Okay. Let's say you've got your daily chart that's making the higher highs and higher lows. So you want to be looking at an hourly chart trading trend strategy, right? So on the hourly chart, what are you going to wait for? You're going to wait for price to match the overall daily trend. And then you're going to look to potentially buy if price comes back to the averages, closes back above the 50 moving average. Stop loss can be below the 200 or the previous swing low, and you're going to target at least a 2-to-1 return on your risk. Okay, so this is how you can trade the trend really simply. You find out why a currency is either going to be strong or if a market is going to be strong or weak. You then go to the conditions and you highlight the right conditions that need to match that why. So like I said, if you're looking to buy dollar, sell CAD, then what are you going to do? You're going to look for higher highs and higher lows on that chart. Once you've found it, you then can apply a trading strategy. So let's say you want an hourly chart trading strategy. You can look for the 50 and the 200 moving average, and you can look for price to come into those, and then you can look to potentially trade that higher. Okay, that is how you can trade the trend, and that is a quick step-by-step guide of how you can do that. So try this out for yourself. try and focus on the why. A lot of retail traders just focus on technicals. So they only really focus on the conditions of a market and the strategy of the market. They don't necessarily follow the why. And the why can lead to big trends within the markets, which could lead to multiple trades and opportunities. And obviously can provide you with a better reward to risk ratio. I can hear my alert going off. So I think that we've got a potential move here on. So gold's come up into that level of interest. So we can keep an eye on that one. And I think we might have seen dollar CAD push into that level as well. Yeah. So we're starting to see a little bit of dollar weakness there, or a little bit of CAD strength from what we were talking about earlier. So we've come back into this area here. So we just need to watch price now. If price can find support here, I might look to buy dollar CAD to see if price can push above this level. I mean, ultimately, we could look at buying it now, because what we could do is not necessarily market execute right now, but buy above the previous 4-hour candle high. So we've got 141.69, right? So we could place potentially a buy stop order, right? Not worked out stop loss or anything like that yet. But if I put in a buy stop order there, we can just kind of feel it out for now. And we can put a stop loss at 141.34. Let's see how that looks in terms of where we've got our profile levels. So that kind of puts us below multiple lows. So 141.30. So we're looking at around about a 40 pip stop loss. Okay. And that's not quite within our 1% range. So I'm just going to change that to 0.75. If anything, I might halve it because I've already got an open position in the market. So we've got buy stop. Get rid of the old one. So I'm only risking now $140. And we will target up at the value area high, 140. Let's say 215. Modify that. So we've got a 40 pip stop loss, 45 pip target. That's what we're going to look for to see if price can push up to that. I could push it up to the value area high, which is at 142.18, which gives us a little bit of a better reward to risk ratio. So risking $140 to get $170 to see if we can get back up into that value area here. Now, like I said, if you're a day trader, for instance, you could look at your 5-minute chart here and you could look at what's going on. Let me just add in. So let's look at current day's profile, right? So one or two things could happen. We've obviously traded out of our value area today, come all the way back up in, and has then kind of like retested the value area low before hitting the value area high and falling. So you've either got this overall value area low, which is from the entire range where we could look to potentially buy from, or you've got the 141.55. Okay. So you can see we're starting to get some buyers coming in now at this kind of 141. So, like I said, you could look to potentially buy that move. I've put my buy stop. I've just moved it up a little bit. 141.70 is our buy stop. I'm going to look to trade that on a 4-hour time frame. And my stop loss is 40 pips. Target is 48 pips. So that's what I'm going to be looking for here on dollar CAD. I think, I like the idea of buying dollars still, despite we've seen a little bit of dollar downside. We are coming into an area of support on the US dollar index. Dollar still technically a bullish currency. If I look at the currency strength meter, we've got dollar as +5, CAD -3. So I want to be trading that potentially. We have a quick look at retail sentiment on dollar CAD. Obviously, we've got CAD data coming up in a little bit as well. So if we do see weaker data, then we could potentially see. Let me just have a look at the high and the low figures of that. Let me just filter it to CAD today. Okay, so if it's saying like if we see unemployment rate up at 6.8%, then that is pretty bad. Employment change, if we see it sort of, negative, that's going to be pretty bad on the bad side. So if we see some big changes on those, then I'm happy to look for that kind of continuation. And that's why I quite like the idea of buying on the 4-hour chart, because, let's say the news comes out and it's pretty good for dollar CAD, it might just move lower without even triggering us into the trade. So that's why I like the buy stop here on dollar CAD. Let me go to back to sentiment. I just want to see how retail are positioning themselves on dollar CAD. Okay, look at this. Dollar CAD, we have 83% of retail traders are short right now, dollar CAD. Only 17% are long. Let's have a look at this on a daily chart. Let's have a look at those positions. So yeah, they have reduced their short positions on dollar CAD considerably, added into some longs, but they are still technically aggressively short. So we could see that push up in price again. The last time we looked at retail sentiment, we were all the way down here at 138, and we were saying we should buy dollar CAD then, and look what happened to price. So I still like the idea of a big move here. I think, a lot of traders, a lot of retail traders would look at this daily chart and think that's too far gone, right? They're thinking that's too far gone. Whereas, if I look at the macro, we've got a Fed that are looking to hike interest rates. We've got Bank of Canada that are still or not even considering hiking rates at the moment. So if we do see a unemployment rate that rises, it's going to be bad for Canadian dollars. So I'm looking for a continuation to the upside. But I'm only targeting the range highs. Don't want to get silly with it and try and target outside of that range. You can obviously see there are still sellers at these areas. So there's no point to push that beyond that limit. So looking at that one, let me quickly flick back to gold, because I did like the idea of getting short gold at this 141 area. We've come up into today's value area. We're looking to reject that. Let me have a look at the minute chart. Okay, so the minute chart has crossed the 50 and the 200, which don't really like to see. We have broken down through trend, though. You can see we made a new higher low, and then price has kind of broken through that. So again, maybe if we can break down below this kind of 41.05, we could see a little bit of downside in gold. I'd have liked to have seen, the crossover retest of the moving averages for that kind of short, because, technically we are trending here, but just go to the higher time frame. Let's look at the 30-minute chart. Higher time frame's a little bit crossed over here as well. I do like the idea of coming back down to this kind of 408 handle. 15-minute chart, we've got the 50 moving average. The price is below the 50 moving average. Where is my 200? Let's put it on all time frames. Let's see where that is. That's currently where price is at right now. So price has broken the 200, come up and retested that. So we've got a lot of resistance around this area here. So that's why I quite like the idea of being short, but I need to really see my strategy line up. And at the moment, it's not quite there. If we break below this area, retest, and we get a crossover of these moving averages on the 1 minute, then I'd potentially look to short that. Let me just open this wide. Just so I can see what's going on in the current day profile. So yeah, I might look for a short on this. If we do see that breakdown, retest, I like the idea of potentially going short on gold. But we'll have to wait and see. If we break back within value of today, then, you know, a move back up towards that 41.27 looks a lot more likely. Dollar has been bearish, but it's starting to kind of formulate as a bit more bullish. We are 11:30, so we are still a couple of hours away from the US Open. So we might have to wait till the US Open to see a bit of volume come in, a bit of volatility come in. And if that does drive prices lower, then, you know, perhaps we are on the right footing for that move. So we'll keep an eye on that. See if it does kind of formulate. What I'm going to do is I'm going to set an alarm around about 41.05. If we do break down through that level, we see the crossover on the 1 minute, then it could be this kind of 15-minute sort of, you know, downward trend continuing, and I might be able to get a couple of chances to get short towards that 4098 handle. If it breaks below that, then I'm looking for the 408s. I'm gonna have to keep an eye on it. I would really like US bond yields to kick higher today. If we see US bond yields rising, then gold will fall. So I want to see US 2-year yields push back up to the upside. You know, let's say it finds a bit of support here at this 200 moving averages, breaks above that 4.1%, then I'm happier to hold that gold short position in the market. So let's keep an eye on that one. Might not come around, it might not trigger, but we shall see. Let me just flick back to the majors. You see how the US stock market is doing today. Yeah, it's just bullish again. I've traded twice the S&P 500, and both times it stopped me out. And I really love the seasonal pattern to go long, but we literally had the 2 days that I bought were the 2 days that we had geopolitical tension, which drove price lower, and we had the afterthoughts of NFP, where NFP came out, we rallied up into the level of resistance. Should have probably banked a little bit there, to be honest. And then we had a turnover, and then it rallied again. I was like, you can't write it. And then I was long again in and around these areas, and then Trump announced he was attacking Iran again, came back down into the 7430s, and now look at price. So it's almost like I'm destined not to trade the S&P 500 long, but I still like the long idea here. You know, still like the idea of being long S&P. And we're trading outside of yesterday's value area. That tells you a lot about what's happening with price. Let me just have a look at if we are actually doing that. Where is the US Open? Is on, I think it's a 30-minute chart. US Open for me should be that candle here. Okay, so we've opened up in, you know, the US sessions value area. So if we do kind of break out of that retest, I might look for longs there, because that will also be a breakout of these kind of highs. And that sort of, you know, if I just punch a line in here, that sort of resistance level that we've seen, you know, the market come into a couple of times and reject. So let's keep an eye on that one. If I put the profile over the whole day of yesterday, a lot of value was built up between 7,500, 7480s. So we can watch out for that one as well. So let's keep an eye on those. Like I said, currently looking for a dollar CAD long position. I am still short dollar yen as of now, looking to see if we can continue lower here. Start to see some, you know, some decent action from the finance minister. And I'm also looking for a gold short if we break below these swing lows. All right. So thanks for joining me today, guys. Hope you enjoyed it. If you did, leave a like and subscribe to the Anzo YouTube channel. I will hopefully be creating more live streams and bringing you more content over the next days, weeks, and months. So thanks for watching, guys. Appreciate it. If you have any comments that you want to learn how to trade like this or whatever, leave that in the comment section down below. If you have any suggestions of what you want to see on these live streams, leave them below. Thanks for watching. Speak to you soon.